Have high interest rates scared you out of buying a house? Well, today we're going to talk about how you can get interest rates up to 2% lower than the current market rate. So up until about 2 months ago, the real estate market was just humming right along, right? We had record low inventory, prices were at all-time high, and even with all that, demand was just seeming to never end. Then, thanks to inflation, the Fed started to raise interest rates to try to get inflation under control. Experts said in May that was probably going to cause a slowdown in the market, come this summer. Yeah, there was a slowdown in the market. Come June, the market came to a screeching halt. And we know that the number one thing stopping buyers right now from buying homes is interest rates and the fear of additional rate hikes coming down the road. However, there are options, and a lot of people don't know about these options. They can get your rates quite a bit lower, sometimes even up to 2% lower. So I brought in my friend and go-to lender, Mark Howard from Fairway Mortgage, today. I thought we would discuss that because it'd be better for him to explain it to you than for me. So let's jump in on my conversation with Mark Howard and see if we can't find a way to get your interest rates a lot lower. All right, so here we are with my friend and go-to lender, Mark Howard of Fairway Mortgage. Like I mentioned, I was gonna let Mark explain to you how to get those rates a lot lower than they are right now. So Mark, if you don't mind, thank you for joining me.
Happy to be here, thanks so much.
If you don't mind, just kind of let people know.
Absolutely. So it really is some great opportunity to buy right now. For most folks, interest rate is that obstacle, right? So we have ways around that. So most people are familiar with discount points, which is basically a permanent buy down of your interest rate. So let's say 1% would be one discount point of your loan amount. That's gonna buy your rate down maybe 1/4%. So, and that's gonna be over the whole life of your loan. But a lot of people don't know about temporary buy downs. So temporary buy downs, the most common is a 2-1 temporary buy down. It's called 2-1 because it's over the course of 2 years. So you're gonna lock in a rate. Let's say you're locking 5.5%. That's gonna be your note rate for the duration of your loan, except for the first 2 years. The first year is gonna be discounted 2%. So 3.5% interest rate on the first year. And then the second year will be 1% less. So that's 4.5%. So 3.5, 4.5, 5, and then it goes back to 5.5 for the remainder of your loan. So it is not an adjustable rate mortgage. It's fixed. It just has a temporary buy down for the first 2 years. Now the cost of that buy down is going to be exactly the dollar amount of what you save on interest. So let's say that first year your mortgage payment is $500 less per month because it's 3.5% instead of 5.5. $500 per month times 12 months is $6,000. So that first year's buy down costs $6,000. That's the subsidy to offset that lower rate. Second year, same thing. Now it's $250 less per month times 12 months, so $3,000. So we take that $6,000 for the first year, $3,000 for the second year. We have $9,000 total in that scenario. That's probably a $500,000 loan, roughly, right? We have $9,000 for a 2-1 temporary buy down that goes into an escrow account. And that dollar for dollar subsidy will actually subsidize your mortgage payment each month during the buy down period. Now, if you were to refinance in those 2 years, here's the cool thing about temporary buy downs, is that that money will actually be used to buy down or pay towards the principal of your loan balance. So you don't lose that money. It's not a fee, it's money in an escrow account. Whereas discount points, permanent buy downs, is just a flat fee up front, done. But a temporary buy down goes into an escrow account as dollars, actual money. And so that helps a buyer ease into their payment and hopefully just buy some time until they refinance. Very good chance in the next 18 to 24 months, we're gonna see rates drop and there'll be lots of opportunity for refinancing. And again, that money from the temporary buy can go towards that refi. So it's a great program. What I'm seeing success with buyers is to use that as offer or ask for the seller to actually help pay for that temporary buy down cost. So for example, let's say you offer right at list price and then ask the seller to give $5,000, $6,000, $7,000, $8,000 as a seller credit, then we'll use that credit for that temporary buy down.
And are those sellers directing that money to go specifically towards that?
No, it doesn't matter. It would just be just like any other seller credit, just towards closing costs, basically. So I forget what page and line that is, but it's a credit towards closing costs, which we will then direct towards the temporary buy down.
Gotcha. Okay. Well, as you can see, there's lots of options out there, right? So I think the bigger thing is not to be scared and stay on the sidelines, or not just to step in and go to conventional loan if you don't have to, but to explore these options that help you out. So, Mark, thank you so much for joining us today and helping explain all this.
Absolutely. It's the time to buy.
Yeah.
I mean, when was the last time in the Austin market you could do a program like this and get away with it, you know?
With the amount of inventory that we have online
Exactly.
right now.
And there's such great opportunity right now. Don't let interest rates stand in the way.
There's no doubt. So if you need anything finance-wise, Mark's a great guy to reach out to. I'll put his contact information down below. And of course, as always, if you need help buying or selling, I'm happy to help you out. So hope you all have a great day. Thank you so much for your time.
Thanks.